Hello. In this video, I would like to talk about one of the questions we're having in chapter 4. People get confused about income tax credit or the credit amount. How you calculate it? What kind of situations or factors you need to consider it? So we'll see one of the questions as example. We see the first question. They want you to calculate the income tax credit base and the credit amount applied against federal income tax payable. So we have learned from our chapter 4, there's federal income tax credit, which including employment credit and CPP credit, EI credit, spouse or your dependent credit, and then your personal base amount, right? So when we see the first question, Cami has net income of $96,500 and all is employment income. So the total employment income is $96,500. Her employer has withheld maximum EI and CPP. So those are already given to you. That is the EI and the CPP credit. And she's married to Bob, who has net income of $8,000. They have 4 children, 3, 5, 7, and 9. All of the children are in good health and none of them have any income during the current year. So when we first see the question, we have to ask ourselves, what kind of situations or factors we need to consider when you to do the taxes for Cami? Okay, so we only need to consider Cami's situation. Now, we know that we have our very basic BPA, right? The basic personal amount. And then you need to consider if there's spouse amount we can claim, if there's spouse credit we can claim. For Bob, yes, because she's married. And now CPP EI has already given to you. That will be included in your consideration as well. Now we're going to the children who are under 18 years old and there are 4 children. We need to, if you do a real situation tax return for a client, the 4 children's information you need to enter in under a dependent information, right? Now, people are thinking, are those related to a children's tax credit? Children's benefit, actually we'll see that. When you consider of a children's credit, we only have 2 questions to ask yourself. If you're eligible to claim the kids as your eligible dependent. In order to claim the kids as eligible dependent, you need to qualify for 3 different situations, right? We're going to talk about that later. And then the second, are you able to claim the caregiver amount in Canada? So the caregiver amount always in the situations as well, right? You have to ask yourself if this Cami qualify to claim those 2. If not, then you do not need to consider any other situations. The kids information enter in will definitely affect the children's benefit, but that's not a tax credit. You need to calculate it. To better understanding, I open the profile, which is a tax software when you prepare your taxes, or if you go to a HR block, they probably use profile to do tax. But that will be an easier way to explain the situation. I already started, so this is for 2021 personal information. What you need to do is you enter the personal information. I didn't enter anything, but the marital status is very important because it's going to affect your credit. So I entered married. Now, what I need to do is I go to my spouse information. I need to enter his income because that will decrease the spouse credit, right, from maximum amount. Now, when I enter everything, I need to go to dependent. I enter A, B, C, D, the 4 kids with 3, 5, 7, 9. I enter all those information and that's it. When you take a look at the dependent information form, actually, there is nowhere you need to consider if they're children's benefit or children's credit sort of thing. There are only situations you need to consider is if you can claim as eligible dependent, or if the kid has income, or if you can claim the caregiver amount, if he is disability amount, disability credit, where anything can transfer to you. Or the one we talk about it, so there is a disability, right? credit if it's qualified to transfer to the parent, and then the caregiver amount, and then their children's fitness amount, art amount, or tuition amount. That's it. So those are the only thing you need to consider for the dependent. Now we go back to our T1 summary. Now I already entered the chemist total income. That's from the question 96500. So I already entered the employment income. Okay. Now when you go down, oh, this is summary. Let's go T1. Now this is exactly how that works, because we learned how to do the calculation. And of course, currently you always use software to do the calculation things. Now we enter the income. Those are total income. That's it. That is the all incomes for Kami. Now we move on to the credit or the payable first, actually. So we could see the federal tax payable. We see their different income bracket, right? So we have from 15% to 33%. Now we could see that her total income is 96500, so fall into the second bracket. I mean, first bracket actually. So we use 96500, deduct the 49020, and the 47480 will go to the 20.5%. So that was the one we mentioned yesterday. If this person's income is $1 higher than the top amount, then the only $1 will be charged, will be taxes for the higher tax rate, right? So the rest of it will still stay in the first bracket. And then if is 98041, the $1 will go to 26%. So that is how the calculation going on. So this shows very detailed about you how to do the calculation. Now we move on to the credit. So that is the question asking, how are you going to calculate the non-refundable tax credit against the federal tax payable? We have our very basic total amount, that is 13808, right? And then the spouse amount. Now we could see if you go to Schedule 5, you will see how this amount is going to calculate it. We know that the basic personal amount is 13808. That's from your spouse can transfer to you. But Bob, that's Cammie's husband, has income, 8650. So it works in there, 8650, which left 5158 can carry forward to you. I was on T1. So that is 5158 coming from. Now, when we move on, so CPP, EI, those are the amount already being held with your employer. So it's going to automatically shows in there. It's the maximum amount for 2021. Now, they have also employment in Canada employment amount, right? So it's 1257. That is maximum amount. Then this a real situation software actually calculates automatic expenses, but for our exercises from the textbook, we do not need to consider this. Then those are the 3 non-refundable credit you need to consider. Then we move on to what else? I think that's it for the situations. Yeah, so we could see that there is nothing will affect your credit because the 4 dependent. The 4 dependent will definitely affect you. We can see the T1 summary. Your child tax benefit, those are the real money, the cash basis. You will receive it by monthly. Or the RSP contribution, that depends on your income threshold. So that is actually for question number 1. Right, so you consider your basic personal amount, you consider your spouse credit, you have EICPP, Canada employment amount, and then times 15%, that will be your credit. But the second question is a little bit different because it's a single parent and all the income are coming from the spouse support payment. So there's not employment income. And then the one kid who turns 15 years old has income 8,640, but the rest of the 2 didn't have any income. Then you can claim your personal basic personal amount for Scotty. And then you also eligible to claim the eligible dependent because it's single parent, and because you, but be careful that you're only going to claim one kid. So you're only going to claim one eligible dependent. If you're still concerned about parental or dependent transfer amount or credit, you could go Schedule 5. This is talk about very detailed. So when we talk about spouse or common law partner amount, we could see that is the basic amount if they have income or deduct income. And then if you go to dependent, they're only going to consider it if you can claim as eligible dependent, or you can claim the Canada caregiver amount, right? And that's it. The caregiver amount, of course, you're going to consider if it's over 18 or younger than 18. It's different. Or the kids is infirmity or very healthy. Not healthy, because healthy you cannot claim the caregiver, but yeah. So if it's under 18 or over the 18, and then that's it. So that is everything you need to consider when you do a spouse or dependent credit base or credit amount calculation. Also, I actually searched for the CRA website. They have a very detailed explanation for Schedule 5 regarding amount transfer from spouse or common law partner and dependents. So you can read through. Those are everything actually mentioned in our textbook. Is exactly the same thing, but they have a very detailed analysis. That's it for the caregiver amount and eligible dependent